All right, so welcome back, guys. So let's talk about how we can get entries, the time frame we use for the entry, also the complete time zone we use to snipe these entries. So I'm going to run you down on how to start, look for the direction of the trade, look for the entry, take the trade, manage your trade, everything. So stay put. I'll just do three examples. So the first example is Euro USD on the weekly chart. Now, what's the first thing you want to do? You want to be able to identify your dealing range on the weekly chart. And how do you identify your dealing range? You must find an ERL that price has taken out, external range liquidity. We have this one here. The way I mark my ERL on the weekly chart, I use black lines. So that's my ERL marked out. So it has been taken out. Now, this low is a very important low because it led to price taking out this. Is this high confirmed to be an established high on the weekly chart? No, it's not. For it to become a weekly established high, it needs to lead to what? A change of character on the daily. Please, if you don't understand this statement, see the previous video before this video on this channel. Very, very important. This thing must happen here. So that's why it has not happened here yet. So here's there is no weekly high here, but this is the ARL taken out and this is a low that led to it. Very important. Now, what do you do next? Go to the daily chart. So on the daily chart, you want to identify highs and lows also. Now, here has been taken out fine and good. Is this a qualified or established daily high yet? So let me tell you about this. I don't think so. Why? For this to be established, the 4 hours has to do a choke. Okay? The 4 hours has to do a choke around that area where the high is, which is immediate lower time frame. If it doesn't do that, then this is not a guaranteed um, daily high to me. And without much stress, looking at it, I know that it has not happened. So we'll go to the 4 hours, you see it. But for now, let's also figure out the low that led to this structure high there. So this, what low on the daily led to that? So some of you will go here to choose this low, that this low led to this particular point. But that's wrong. Why? This low is only valid when it successfully breaks a daily high. This high is not a daily high because it did not lead to a 4-hour change of character. So I never take any of this things seriously. So here still remains the low responsible for all of this move. So nothing to draw on the daily, literally. Like maybe you can just put out some of your whatever, but I don't think it's necessary. I don't even think it's necessary. Let's just remove it. So if you go to the 4 hours, now it's on the 4 hours you really know what's going on. Now on the 4 hours we are seeing multiple structures. That's not our business. We want to find out what is going on right now. You find out that the 4 hour there is an ERL that was taken out, which is this line. I'll make it green. There's an ERL that was taken out, external range liquidity, and then we have this particular high. How do we know this is an established 4-hour high? Well, on 15 minutes, if this place has led to 15 minutes chop, then we can take it seriously. So now let's pick the 15 if that has led to a chop around that area. So as you can see, price has led to a change of character, which is this, and this. So a high was taken out, a low was taken out, as a proper was change of character. So it's happening around this 4-hour high area. So that means that 4-hour high is established. So whenever that has happened, what is the next step? We want to identify an IRL, internal range liquidity, which includes either order block or FVG. This FVG price has entered it before, so it's cancelled. This is the next expensive or valuable place that price is going to come for. Next discount area, rather, not expensive, discount area that price will come for. This is an order block, right? And yes, probably this low is another what's very good area that price might come back for. So my draw is lower. Where is the extra draw liquidity? This place and this place. That's all. So what are we going to do? I want to go to the 1 hour chart and see if I can refine this place to be smaller and more precise. Well, it's still the same zone, nothing too different. If I go to the 15, let's see if I can refine it. Well, I can bring it down a bit, still the same zone. So I'm gonna put a horizontal ray on it, so mark the exact price I will be sharp watching out for. 1.09021. So now, what is the next step? All we have to do is wait for our Q zone. So if you're watching this video, make sure your time is set towards UTC -4 New York time. That's the time zone that I'm using to teach this video. If you don't set it in this time zone, you will not be able to implement all your learning here. It will get confusing for you. So all you want to wait is till 2 a.m. Eastern time. So this is 22 o'clock. So that's not trading times, the Asian session. Now you want to wait till it's okay. Let's put it here. So you want to wait till it's what, 22 o'clock. So this is what. So you want to wait till it's 2 o'clock Eastern time. So this is 2 o'clock Eastern time. Now it means you're ready to execute. So what is your midnight open? You have to find your midnight open. So midnight 00 hours is your midnight. You can see it midnight. The opening of the midnight candle is low. Why? Because it's what? It's a bullish candle. So the opening is going to be at the low of that candle body right there. So all you want to do during your trading time, remember our trading time in London is between 2 a.m. Eastern time to what? 5 a.m. Eastern time. Okay, if you're watching from Nigeria, that is 7 o'clock a.m. in the morning till 10 o'clock a.m. in the morning, right? So I'll write it here. So you see it 2 a.m. Eastern time to 5 a.m. Eastern time. That's your London trading time. If you're in Nigeria, this is how it's gonna be: 7 a.m. to what? That's for Nigerian time to what? 10 a.m. And when you're choosing your 00 hours with your Eastern time settings, you're using midnight time here. If you're in Nigeria, you don't want to set your time, which I'm recommending you to set. But if you want to use Nigerian time, the exact midnight time that we are marking here is our 5 a.m. in the morning. Our 5 a.m. candle, that way you're marking as your midnight. Okay, so you want now, all you want to do is you want to look for a point of interest above this blue line on the 1 hour chart. So like all you want to do is wait for price to go above the what? Midnight to meet this, any of these POI. So we have this buy side liquidity here. Now you see price just ran this buy side liquidity here. So what do we do next? 15 minutes chart. On the 15 minutes chart, the same thing happened with the pin back candle. Wow, that's great. On the 5 minutes chart, the same thing happened with what? A pin back candle. That's great. So what are you going to do? Now you need to be extremely observant about the closest drop. This is London. These are overall drop for the whole day. But now this is London. You don't expect price to run to here in London session. Okay, it happens sometimes, but you don't have to trade like that. So you want to trade to the closest sell side liquidity that is towards here, that I see is pointing in this direction, which is here, so that you can get in and get out as fast as possible. So you can aim, like me, I like 2.5 hour or maybe 3 hour, depends on your appetite. But don't be greedy, okay, with RR or you mess up. So now I want to wait for a market structure shift on my 5 minutes chart. If price breaks below this low, I'll accept it as a market structure shift. So now this has broken and closed below. So I'm going to take my trade here. This is where I'm supposed to enter my trade, right? But now you have to be very, very smart. If you're trying to exit here at this blue line, if that's where you want to exit, then entering here will not give you the perfect RR. So what I'll do is I'll shift my RR to this 2.5 here. If price comes back in, it will tag me in and run to my TP. If it doesn't, then I let the opportunity fly away. I don't really flying folk. So this is a typical example. So now, okay, so now the London session is over. Remember I said it closes what, 5 a.m. Eastern time. So no entry for me. So I'm gonna come back in New York time. When does New York time start? 7 a.m. Eastern time 7 a.m. Eastern time, and in Nigeria it's 12 p.m. afternoon. Okay, so I'm gonna write it here. New York is gonna be starting. I'm gonna start 7 a.m. Eastern time till what? 11 a.m. Eastern time, and in Nigeria that's the same thing as 12 p.m. till 4 p.m. Okay, you see that? So now, if your setup comes in very early, around 7 a.m. Eastern time, 8 a.m. Eastern time, which in Nigeria becomes around 12 p.m., 1 p.m., you must make sure the POIs you're working with is still above midnight. Okay, so let's wait for price to enter a serious POI. So now, at this point, what POI are we going to use? We have a new buy side liquidity here. Let's see if price will actually run it. If price doesn't run it, then fine and good. So you see price is sinking down, no POI yet, so you just keep waiting. So now, price had another buy side liquidity here, and it was ranked above this blue line. So beautiful. So what do we want to do? So 15 to verify that it's a sweep, the pin bar. So go to 5 minutes to verify that it's literally closed below this market structure shift. Now that's good for an entry, but this cannot be our draw liquidity for New York. Okay, no, it can't be. That's pretty too close. So this is the main draw for the day. So I'm aiming here. And if I don't want to be too greedy, if I want to be more conservative, I'll aim for this fair value gap here. Okay, so now let's see how we can get our entry. As the candle closed below here, that's where I'll be getting my entry. This is a closed after the market structure shift. That's where I'm getting my entry. Stop loss above. And will that give me a 2.5 R from this first target? Will that give me a 2.5 R? Now let's see if I extend it to this next one. You give me a 2.5, I'll be that's 2.8, but I trust this one. So this is 2.8. So I'll just leave it like that. Okay? Just leave it like that. Let's see if we hit our targets. So as you can see, price kept running lower. Running till take profits. Let's see if they want to hit that day. So now, in cases like this whereby your time zone is over, which is 11, what you want to do is you want to reduce your TP to 2R so that I can get that as fast as possible. Okay, so this is 2R right now. So once price gets back to this TP, you exit. Alright, so it's got back to that TP, you just close it for the day, you reduce it to 2R. But see, at the end of the day, I think we even sank till the end. But yeah, you've gotten the idea, you've gotten the entry and the whole idea. So now let's go to example 2. Alright, so now in this example, this is a parallel day to what we just did. Now in this example, what are we doing first? We're on the weekly chart. So what do we identify? An external range liquidity. If it has been taken out, it has not been taken out yet, but it's ahead, it's still market, which is this. Now this candle you see is the full weekly performance of the exact candle we are trying to trade. So don't get twisted. So the focus on this candle, right? This one before, but this is where my ERL is, and it's obvious that we are actually trying to break through it. So I've identified my ERL on the weekly and the low that led this low. Now okay, I can't call this a low. I can't call that a low. Rather I'll call this low. Why this particular low? Okay, so let's see. So I'm gonna call this my low. So we are in this dealing range on the weekly time frame. This low and this high, perfect dealing range, right? So we know we are headed towards this high. It's very obvious. So what you want to do daily, you want to find your dealing range on the daily too. Now let's look at the daily critically. Where is the most recent ERL on the daily, whether it has been taken out or it is yet to be taken out? So you will find out that we have this ERL that was taken out here on daily charts. So let me make everything there red. So this was the low that pushed price to take out this ERL here on the daily chart. So ever since, we have not had time to pull back lower because no effective daily high was created. So price has been drawing to this weekly level. Yes. So we are bullish on weekly to break it this high. On daily too, we have been dragging price to this high too. So bullish. So 4 hour, let's look at 4 hour where we are right now. So we just took out an ERL of 4 hours, right? So make it this green. So what happens is you can't trade lower into IRL because this high is not yet established. You ask me, but how do I know? So let's pick on the 15 to know whether this high is established or not. But if it's not established, you can't trade lower, you just trade higher. So can you see that it's not established? What makes it established is a chalk. There is no chalk here. There will only be a chalk when price breaks this low. That's only when there's going to be an active change of character. When it does not, there's no chalk. So what do you do? So on the 4 hours, identify that this is not a high. So it means price will most likely was drop higher. This high, this high. Now on this particular day, this high is going to be seen as what's previous day high because we're in a new day now, and this is old weekly high. So we just need an entry to trade towards what's the previous day high. That's it. We are bullish on all of these time frames. So it's a what's win-win, ahead. So we're going to play this our London kill zone, a London time. So let's play till this 00 hour. So it's 00 hour. So mark the opening of this candle. Opens at the bottom. Make it blue. Make it thick. It can stand out, right? So we'll play it till it's 212. So now it's 2 a.m. Eastern time. We want to trade because 1 hour point of interest that are below this blue line because we are bullish. So I'll just make this. Okay, now we actually run a sell side liquidity, which makes it perfect. So on the 15, what do we want to do? Watch what 15 has done. We also run with the what's weak. Nice. On the 5 minutes, what do we want to do? We also run with the what's weak. So I want price to break above here at least for me to consider it a market structure shift. So did it happen? Not yet. Did it happen? Not yet. Keep watching. Did it happen? Not yet. Keep watching. Did it happen? Let's see. Okay, actually it has happened. Price breaking above. Then I'm good. So now I've seen a good sign here. We broke. This is a market structure shift we just had right here, a very important one. So this is exactly where I was gonna enter. If I'm gonna enter, my stop is gonna be here. Now, where is the drop for London? Remember, we don't have to be aiming too high for London. A very clean place to aim is Asian high, which is this because it's closest. This side is kind of far. But now you want to see how close it is. If it's just too close, like this, now two things are gonna happen. If you enter like this, you're not gonna make up to 2R, and if you try to reduce your distance, take your entry, you might not get tagged in. So what happens is you want to extend your TP a bit to a close by high around here. Okay, so I want to extend that a bit, but not too much. Let's leave it at 2.5 R. Let's leave it at 2.5 R, and let's see. So if price gets to Asian, you just want to close your risk in case of any potential reversals. So that's just basically how you would have caught this trade on the London session. Okay, so very, very, very key. Now let's see the next example. All right, so now this is another very, very sweet example I'm going to show you guys. So on the weekly charts, ERL marked, and this time the low that led to the ERL ran is marked. This is ARL sweep. So can we comfortably call this a weekly high? We can't until we verify from daily there's a chalk around here. But based on what we are seeing, we have been able to identify that here has been run, and we can only verify that all this internal range liquidity will be met if this high has shown that it's a daily, it's a weekly high. So nothing much to do there on the daily. So let's see. Now, as you guys can see, this is a full daily swing. So here we go. This is a full daily swing. This is a full daily swing. So here on the daily is what's qualified to be a daily high. Okay, why? Because it led to a 4-hour chop. You can see how far price has gone. That yeah, a 4-hour chop was occurred. So now, no doubts, this on the daily has confirmed that we'll move lower. Okay, towards lower prices, lower internal range liquidity. Where at an order block now, we might hold, we might fail, we don't know. But now that we are sitting in an order block, this other block might fail, this other block might hold. So we can't know the draw on the daily time frame right now. We can't know if it's lower, we can't know if it's higher, because this can push it higher and it can fail this. So in a case whereby weekly, you can't tell, because you can't tell the draw weekly, because this is not a weekly high yet. It's only going to be a weekly high when the daily breaks and change character, and the daily has not changed character yet. So here is not a weekly high. And as long as it's not a weekly high, you cannot tell the DOL on weekly. Daily, this is a daily high, but we cannot tell the DOL because we are in this place. It could go up from here, it could go down from here, so it's dicey. So we run to the 4 hours to see. On the 4 hours, it's most likely to be clearer. So on the 4 hours, where is our most recent daily range? So I like using green line to show that, right? So this is our daily range. So how was I able to know that this is a 4-hour low? Because now the daily range we are choosing is between this high and this low. This high is qualified because it broke previous low. But you see this low, what makes it qualified is because it led to 15 minutes chalk around there. So let's peep. You can see the 15 minutes chalk around here, this and this. You see that? So it's a 15 minute chalk. Price broke this and broke this high that led to the low. So that's enough reason why, yeah. So that's established. So whenever this kind of thing is established, where is price going next? What are you going to look for next? So when you find out that this daily this 4-hour low has been established, and even the fact that in this daily order block, you need to look at what price did after that. You can see that price entered an internal range liquidity, which is a fair value gap on the 4 hours. So you need to know this, because you might say, okay, price has created this low, so price wants to trade back into this range, into more internal range liquidity. That might be your bias. But whenever you see this kind of thing happen, it's capable of what? Pulling price lower, provided that it can be refined to the 1 hour, 15 minutes, and 5 minutes. Meaning if this FEG is going to be visible on other time frames. So let's see on the 1 hour if it's visible. As you can see, it's not visible. Nothing is visible here. So that's the number one red flag. So what does that mean? It means this FEG is not capable of pushing price lower. Price will have to still buy and seek point of interests, okay, that can push price lower. A point of interest like that, if we pick 1 hour, we can see that around there. Do we even have a POI? No. So most likely price will also cover this fair value gap of 4 hours. So in this case, maybe this other block is a real deal. Let's see what that place is on 1 hour. You can see that that place is something valuable on 1 hour. If you check 15, you find out that that place is something very valuable on 15 too. FG is here, other block is here. So you have seen your overall draw. So your our draw on 4 hours is higher. We're coming from other block and we're going higher. You feel me? So that is a very good, So let's look for our entry pattern. So London, 2 a.m. Eastern time, that's when we look for trade. So let's play till it's midnight first. So I can mark our midnight open. So it's midnight right now, and it's a red candle. So the opening price is up here. So as you can see, make it thicker. So any point of interest below this on the 1 hour that gets, you know, mitigated or taken out or whatever, is the particular POL we're going to work with to go higher. So we want to make sure it happens around 2 a.m. Eastern time. So around 2 a.m. Eastern time sharp, that's when this low was run. Take a good look at it. So let's see on the 15 minutes. Now it broke. I can see some breaking below this. The body closed below. Even on 1 hour, the body closed below. So that's a red flag for me. It must be with the total sweep. The body should never close below. So I'm still observing. Can you see what happened? How price shifted way lower before it started going up. Now I'll still be chill because I've not still seen the correct PO I'm looking for. It's still not skill zone over. So what am I going to do? I just saw that price pulled back to this other block. So let's refine it to 15 minutes. So on 15, where is this thing? This is an FVG on 15 minutes of price reacting from around the same other block zone. So what do you want to look for now on the 5 minutes? What? A chalk. And in this chalk, you want to make sure price closes, a market structure shift where price closes above the previous high. So what time is it? It's already almost 5 a.m. Eastern time, the end of London. So what will I do? I ignore. It's a New York start. So it means I don't have any trade this London session. So I'll just wait till New York has started. So New York start by 7. So 7 New York has just started again. So now as New York has just started again, the same process. DOL has not been met. Where is our DOL? High up here, but then we have a closer high here that price has not affected. So that's kind of very close. That was work with was our closest target, since here is very very high for price to come for today. So we need a POI below midnight again, or else we won't trade. So price needs to enter a POI below midnight. This other block has been mitigated, so we don't need it again. We can work with this rejection block, because if you refine the rejection block to the 15-minute chart, it's gonna give you a what? A an order block. Rather, if you refine it to a 5 minutes, it's going to give you still an order block if you try to bring it down a bit. So let's leave the zone that way though. So now all we want is for price to come to the rejection block, then we might take it seriously. Now boom, this is that price came to the rejection block. So on the 15, what do we want to do? On the 15, we want to see price also react from this place. So we want to look for our 5 minutes chalk. So now in there are cases whereby there will not be any 5 minutes market structure shift, meaning you won't see something like this and maybe pull back, or it will just be like a straight up candle. It happens, and all those things usually happen whereby when price is reacting to a particular refined point of interest, it leaves a big FVG like this. When things like this happen, after this aggressive candle, it leaves a big FVG like this. Okay, you can go and test this and study this. If it ever happens, then you can enter that trade like that, because the next candles might be really really big and you miss out. It happens. So as long as you see this strength candle here and you see an FVG plug to it, then don't need it's like a go ahead 10 pips stop loss. And let's see if we get our 2.5 hour. So it's 2.4. So let's reduce our entry so I can get it straight up 2.5. And that was how we took that trade. And let's see if it's gonna hit. It's gonna hit. It was a very annoying trade, so it actually hits. So these examples will guide you, and you can ask questions in the comment section, and you can send me a message on Telegram or WhatsApp. Check the description to reach out to me. See you in the next video.